In today's session, we're diving deep into the Volume Profile Pivot Anchored Indicator by DGT. I'm going to walk you through everything you need to know: how it works, how to set it up on your chart, what each feature means, and most importantly, how to use it effectively in real trading conditions. By the end of this walkthrough, you'll know exactly how to read the data it gives you and how to combine it with your own strategy to make more confident, well-informed trading decisions. All right, let's jump straight in. First, open up TradingView and head over to the Indicators tab at the top of your chart. In the search bar, type Volume Profile Pivot Anchored. You'll see it pop up in the list of community scripts. Look for the one published by DGT. Click on it, and just like that, the indicator will be added to your chart instantly. You can now close the search window. One thing I love about this tool is that it works on any market, whether you're trading Forex pairs, crypto coins, or stocks. And it adapts perfectly to any time frame, from scalping on the 1-minute chart to swing trading on higher time frames. What is the Volume Profile Pivot Anchored Indicator? The volume profile is a charting study that visually displays where trading activity has taken place over specific price levels. Instead of showing volume at the bottom of the chart, like traditional volume bars, this indicator plots horizontal histograms directly on your price chart. This makes it much easier to see which price levels have attracted the most buying and selling interest. Now let's quickly go over the key features of this indicator so you know exactly what you're working with. First, we have pivot anchoring. The indicator automatically detects market pivot highs and lows, then anchors all volume calculations from those points. This keeps your analysis focused on real market turning levels. Next, you'll see horizontal volume bars displayed directly on your price chart. These bars make it easy to spot where trading activity is strongest without having to guess. The bars are color-coded based on the strength of the volume, giving you a quick visual read on whether a level has light activity or heavy participation from traders. Then there's the point of control, or POC. This marks the single price level with the highest traded volume in your selected range, often a key area where big players are active. We also have the value area high and value area low. Together, they highlight the price zone that contains around 70% of the total traded volume, helping you define the most accepted market range. And finally, tooltips and data labels show extra stats like cumulative volume, average volume per bar, percentage changes, and even the width of the value area. Let's go over the indicator settings. You can see over here the indicator settings window. You can reset it back to the default if you want to start fresh. First one on our list is the pivot point left-right length, which is set to a default of 20. This controls how many bars to the left and right the script looks when confirming a pivot high or low. If we increase this to 50, you'll notice fewer pivot points displayed. This is better suited for long-term or swing traders who want cleaner levels. If we reduce it to something like 10, we'll get more pivot points. Useful for short-term trading or scalping, but this can also introduce more noise on the chart. That's why in this video, I'll use 30. So we filter out some noise, but still have enough pivots for active trading. Next, the volume profile itself, shown here in gold. This is the horizontal histogram showing traded volume at different price levels. You can toggle it off if you prefer, but I'll leave it on for this tutorial. The value area volume setting simply controls the range of prices that make up the value area, usually about 70% of total volume. We won't need to change it for this example. Most important for our analysis is the point of control, POC, marked in red. This is the single price level with the highest traded volume in the current profile. We'll use this as one of our main reference points in this video. There's also the Extend POC option. If you choose Until Last Bar, the POC line will extend all the way to the current candle. until bar crosses will keep it visible until price moves through it. And until bar touch will keep it until price touches it. For this video, I'll leave it at none, which is the default. You can also adjust the value area high and value area low lines. If you want a cleaner chart, you can disable the background fill for these. I prefer to keep the background off so the chart looks less crowded. That's all we need to adjust for now. Once you've made your changes, click OK to apply the settings. Now that we've set up the indicator, let's look at how to actually trade with it. The first thing we focus on is the point of control, the red line. This is the single price level with the highest traded volume in the current profile, and it often acts like a magnet for price. In many cases, price will return to test this level before making its next move. If we're looking for a buy trade, we watch for price to come down towards the point of control from above. We then wait to see how it reacts when it touches or comes close to that level. If we get a bullish reaction, like a strong bullish candle closing above the point of control or rejection wicks forming, that can be our entry signal for a long position. Our stop loss can go just below the point of control or below the nearest swing low, and our take profit can be placed at the value area high or another resistance zone above. For a sell trade, it's the opposite. We wait for price to approach the POC from below, then watch for bearish confirmation, such as a rejection wick or a strong bearish candle closing below the point of control. In that case, we enter short with the stop loss just above the point of control or the nearest swing high, and target the value area low or a key support level. Another way to trade with this indicator is to use value area high and low as breakout or reversal zones. If price breaks above the value area high with strong momentum and volume, that could signal continuation. If it rejects and falls back inside the value area, it could signal a reversal. The same logic works in reverse for the value area low. A simple way to trade this is by using the value area high. Here's what we're looking for. First, we spot a consolidation around the value area, right here on the chart. Price tries to push above the value area high, but fails. That failure can be our first clue of a possible reversal. Our main confirmation comes when we see a candle close below the point of control. That's the red line marking the price level with the highest traded volume in the current profile. If price breaks and closes below the point of control, that gives us our second confirmation for a reversal setup. Once that candle closes, we can enter the sell trade on the very next candle. The stop loss goes just above the value area high, and our take profit is placed at the most recent swing low. In this example, you can see that after the entry, price moved exactly as expected and hit our take profit target. Here's another example. First, we see price consolidating right around the point of control, that red line marking the highest traded volume in the current profile. Then, price breaks below the value area low. This break is our confirmation for a bearish continuation setup. Once the candle closes below the value area low, we look for a sell entry on the very next candle. The stop loss is placed at the point of control, and the take profit is set using a 1-to-2 risk-to-reward ratio. In this case, if you let the trade run, you can see that price moved in our favor and hit the profit target exactly as planned. The volume profile pivot, anchored by DGT, helps you clearly see where the most trading activity has taken place since a key market turning point. By anchoring the volume profile to pivot highs and lows, it highlights price levels that traders are most interested in, especially the point of control, value area high, and value area low. These levels can act as strong support, resistance, or breakout zones. It works even better when you combine it with your own price action analysis, candlestick patterns, or other technical tools you trust. And as always, this video is for educational purposes only. It's not trading advice. Make sure to manage your risk and practice any strategy on a demo account before going live. Thanks for watching, and happy trading.